where do you think this is closer to a bottom, or you think we're just kind of like getting started in like this bubble pop, and there was a lot of companies that went public at way too high valuations and whatnot?
Yeah, again, it is hard. I would say I think we're right in the middle. Yep. So I don't know if we've I feel like we'll certainly retest the lows where we're at right now. I think that's baked in. But if we go lower from there, or if that's a retest and then we go sideways for 12 months. But I do think we are in for an 12 to 18 month typical 3 to 5 quarter recession. And I think we already started in Q1. We'll see. Like maybe you never know until afterwards, because they have to go back and relook at the data, right? That's just how it works. But that's where I think we're at. Nothing about this looks out of the ordinary from what we've seen before. I'm expecting things to progress similarly, at least in the crypto market. And then in the real markets, the only difference here is inflation, which we've actually been, a lot of places in the world have been trying to generate inflation for a while. So there's some supply chain stuff that's happening there. And what do I mean by that is like, we're no longer buying oil from Russia. So that's going to cause some supply chain issues. Right. And then China's shut down because of COVID. So that there's not enough stuff. There's too many dollars. There's not enough stuff. Interest rates have to go higher. I don't think that's going to change at all. So anyway, I think it's a overall pretty ugly market. I don't think it's atypical in any way, with the little asterisks here around if interest rates really get high, we're talking like 8, 9, 10% on mortgages or something. That would be pretty unusual. And I guess that's still kind of a tail risk.
Matt, you did send me an inflation warning text like 12, 18 months ago. You saw was coming.
Yeah. Well, it was very obvious to anyone running a business. So typically, I would say like the order of operations is people deep in the financial market see things about 6 months before people running businesses see things, and people running businesses see things about 6 months before people who are just going to job 9 to 5 see things. So, you have an advantage of being deep in and having to, allocate resources where you're going to have information a little bit sooner. So yeah, it was pretty obvious. And the oil crisis that's happening right now is making it worse. So what could have been maybe like a 12-month recession, it's probably going to be an 18-month one. Because we got to figure out where we're going to get oil. And I highly suggest Texas, right? Or anywhere else in the United States where we know we could get it would be a good place to start for getting oil and gas. But anyway,
totally agree.
Yeah, we'll see.
Totally agree. Well, Unstoppable made a lot of strides in the last bear market. So I guess general advice for founders who are building in a first bear market, how do you, what were some of the experiences that you learned from the 2018, 2019 cycle, and what are you basically applying today?
Well, first thing you got to do is clean up house, right? Because typically in a bull market, you'll take on a lot of debt, like technical and organizational debt, because you're trying to keep up with demand, right? Like we just had so many customers calling us December of last year. It was ridiculous. Like the customer ticket volume was just insane. So you go through and you clean all that up. And then that should take you, several months, and then reorganize all your processes, focus on internal efficiency, and get that done. So that step one, clean up. Step two, you really want to double down on providing value to your customers. And the way that you typically do that in software is through engineering. Look at where you can help your customers get more value from your product. So at Unstoppable Domains, obviously, we're pushing a lot of new functionality around NFT domains as identity. And we're looking at ways to improve our UX experience, et cetera, et cetera, et cetera. So you'll just see a lot of product and engineering investment from us. And then strategically, once you have that solved, the next thing you want to look at is strategically, where can you start taking medium and longer term bets? So like, what are the things that you would normally say, oh, let's do that later? Well, now you have a little bit more time because you're going to have less customers, right? You're going to hit that's what's going to happen. You're going to, and so this is a good time for you to focus on those medium to longer term projects, which or you believe fundamentally build value for the business. And what's great news is it's probably going to be cheaper to do them, right? Because if you're in a bull market and people are just throwing money at you to get the product out the door, there's a huge opportunity cost to investing in the long term. But when you're in a bear market, all of a sudden it flips on its head, right? Because no one's showing up to buy all your products, right? That day, you're like, well, I guess I have plenty of time to go back in the workshop and do that long-term value creation that we need to do. So that's my framework for how you should think about bear markets. You need to be very focused on value creation during this time. And you should operationalize your organization so that you don't have to be you move completely away from responsive to proactive in your interactions with your customers. So bull markets, product is flying off the shelves. You just got to do whatever you can to put as many band-aids and duct tape on that thing to keep it moving. Bear markets, that's when you take the time to heal, recover, and put all those things together. I'm not the first person to say this. Brian from Coinbase actually has some pretty interesting things that he said. And Coinbase is, everyone remembers Coinbase. The number one complaint on Coinbase in 2013 or whatever was their website, it always goes down when there's a crash, when the market's going too fast or something. And it was almost a meme in crypto that you could know what the crypto price was by if Coinbase was up or not. If Coinbase was up, crypto prices were fine. If Coinbase was down, like the website crashed, then you knew that the crypto prices were down because everyone was trying to sell at the same time and their platform had trouble handling it. This is 2013. They're obviously much different than that today, but that just shows that, you build up this technical debt. Now's the time to refactor and get that fixed.